So this is the run on the bank here, right? This is like everyone getting the fuck out, right? But you'll notice that there was also this trend down, and also what the hell happened here, right? I saw this and I thought, is this an error in FTX labeling on Glassnode or something? It just didn't make sense. They'd been building up this stockpile of Bitcoin, as they won more and more trust. This is all of our customer funds on that exchange. And then suddenly, as Three Arrows collapses, 55,000 of their 130,000 Bitcoins got withdrawn.
Popular on-chain analyst Willy Wu has reacted to the FTX collapse. In a recent interview with Scott Melker, Wu discusses the crash and how it has impacted the entirety of the cryptocurrency market. As an on-chain analyst, Wu pulls out his charts, showing the exact moment things started to go wrong with the now bankrupt cryptocurrency exchange and its sister company, Alameda Research. According to the information that has come to light since the crash, Alameda Research, a cryptocurrency trading firm that was co-founded by SBF in 2017, ran into some troubles after the Three Arrows Voyager contagion. But instead of dealing with its problems ethically, it tapped into FTX client funds to the tune of billions of dollars. There have also been reports that Sam Bankman-Fried, the former billionaire chief executive officer of FTX, took around $300 million for himself after a $420 million funding round in 2021. In his interview, Wu explains that FTX was a decent cryptocurrency trading platform, a personal favorite in fact, but SBF's greed toppled it all. We will now take you to Willy Wu's interview. But before we do, please take a little time to hit the like button, subscribe to the channel, and smash the notification bell for more videos. Also, ensure you drop your comments and observations in the comments section below. Everything helps with the YouTube algorithm and significantly contributes to the channel's growth. Thanks and enjoy the video.
I trade on FTX, right? It's where I like to trade. That I gotta hand it to SBF is that, like, okay, he stole a lot of money that wasn't his, but the exchange itself, he built a good product. Just got greedy. He just got very greedy. I mean, if he'd stayed in the long run and didn't do the greedy stuff, I mean, he would have the best exchange out there to use. Let's go to exchange balance, right? And here we go. So these are all the coins on exchanges. Everyone's getting the coins off the exchanges right now. Let's zoom into FTX. This is Bitcoin only right now. You have to go onto CryptoQuant, I think, to get the stable coins. So this is the run on the bank here, right? This is like everyone getting the fuck out, right? But you'll notice that there was also this trend down, and also what the hell happened here, right? SBF see, we're doing a bit of cold storage movement here, nothing to be worried about. No one called them out on it. I thought it was maybe this move to a new labels that were still FTF. You see this sometimes, as you see,
right, moving from one exchange wallet to another, and nobody knows the new wallet, right?
Yeah, right. But Glassnode didn't pick that up, right? They maintained that it went out of the exchange. So no one actually called it out. And after that point, so what happened there, right? Is like, did Alameda need to plug a hole in their books after 3AC collapsed? But after that, look at this. This is like a constant trend downward with Bitcoin reserves. Like the guys that knew that FTX was not good, and there was a constant withdrawal. So as the FUD was happening on Twitter, I was taking a look at this chart, and I'm like going, this does not look good. I'm like, I think I got all of my stuff out of all my Bitcoins out of FTX when they had like 6,400 Bitcoins left.
Glassnode actually identify an exchange wallet.
They use a third party as part of it, and then on top of that, they add their forensics clustering type algorithm on it. So they already have an automatic algorithm that's looking at all addresses across the network and clustering that just based on interactions between the wallet addresses. and you can see them, they resolve into clusters of entities, meaning that this wallet likely belongs to this known cluster or this person or this exchange because of the interactions. And so it doesn't take long for the interactions between those coins to start to give away telltale signs that it is belonging to a previously known entity. So that layer helps them resolve this. And then there's an army of people in the industry that are labeling different addresses as this is FTX, this isn't. We know this because I deposited funds here, and that's their address. And so different you can actually just fire small deposits into the exchanges, and you'll see it arrive, and from there you can kind of build up a picture and cluster it together.
With his recent media appearances, SBF seems to be trying to whitewash his image, apologizing frequently and perfectly playing the part of a helpless CEO who made a few bad calls. But a few bad calls don't make $10 billion disappear into thin air, which is exactly what has occurred here. From the obvious commingling of funds between FTX and Alameda to the complete dependence on the FT token, there are just too many red flags. In his interview, Wu explains that other cryptocurrency exchanges might face similar issues down the line. He uses the example of Binance, the world's largest cryptocurrency exchange, by trading volume. The on-chain analyst explains that Binance's collapse will cause a nuclear winter in the crypto markets, but it might not be as far-fetched as we believe. Here is Willy Wu.
It feels very much like most of this price didn't only say Binance blows up. I noticed that Binance, SAFU fund is, it was 1 billion. I think it's about 800 million the last I checked.
Yeah, I think they were saying they were going to push it to 2 billion, but I don't want to be quoted on that. But I know they are looking to increase that.
Yeah, I mean, it's if you look at it right now, with like 800 million backing $68 billion of assets, and then you take into account, over 40% of it is highly correlated in BNB tokens, and the other bit is, I think 68% is both BNB and BTC. Like if Binance goes under, like there's a major hole in that in their balance sheet. Like their insurance fund is like 68% correlated, being Bitcoin and BNB. So you might say maybe 250, 300 million of it is solid, as in US dollar.
That's nothing.
Right? It's like 50 basis points. It's like 0.5% or less of assets under management is backed by the SAFU fund. FTX was a very different kettle of fish, because they pulled all those funds out, and then it was on Alameda's balance sheet, and they had all this leverage secured on FTT token. This would be the case only if Binance collateralized with BNB token, taking huge leverage and risks. They own 40% of the BNB. I don't know what it is actually. They haven't sold their 40% on the creation of that token. So there's a lot of money there that's in BNB tokens that they're sitting on, and obviously they're plugging that into the SAFU fund to give us a psychological sense that it's a big $1 billion. If they're going to bring it to 2 billion, what are they going to fill it with? Is it going to be more of their stockpile of BNB? And so that's a big question, is like, what is actually inside of this stuff? CZ said that they never use BNB to collateralize, but they're definitely using it as collateral inside the SAFU fund. And so there's stuff,
they're not borrowing against it doesn't mean they're not using it, right?
Yeah, it's still collateral, right? It's collateral. It's like in the case of a liability, which is we're going to pay out to people who are losing money on Binance Exchange. That's the collateral that they're going to have to sell. So that's the liability. So it's not. This has been a good thing. I think the whole industry is starting to clean up, and everyone's looking into the risks involved with the counterparties. So that's a good thing. And I look at this as, wow, crypto had its 2008 unwind. It's like with what happened with banking and TradFi in 2008. we learned that lesson very quickly the moment we could get leverage in the system. And, you know, remember, leverage in the system only came about starting with BitMEX in 2018. That was the first time we get significant leverage in our ecosystem. So it's only in this bull market that we had significant leverage that built up. And the first time we could get leverage in the system, look at what happened. Like, we did everything in this industry. The players, the institutions at least, did, not we, but the institutions did everything that they could to take crazy risks, just like banks did in 2008, leading up to 2008. So, you know, it's a good lesson. Hopefully we move on from this and learn these lessons and build a more, you know, legit, more rock solid industry from here.
What are your thoughts on the state of the current crypto markets? Is the crypto industry already on the recovery phase, or do you think there's more to come? Please let us know your thoughts, comments, and observations in the comments section below. Also, ensure you smash the like button, subscribe to the channel, check out our other crypto-related videos. Thanks for watching.